Can't get enough of your song of the moment? Download and indulge in the tracks you love over and over again with Spotify Premium. Tune in to discover an ad-free music listening experience where you can play your favorites in any order. Tap the banner to learn more.
Okay. Let the music play for a little bit longer. Got 3 more minutes. Let everybody get in here, and then we'll start class. All right. Let's get into it. Let's get into it. All right. All right. Welcome everybody to Trade Talk Thursdays with no other than Meek, the financial geek. Welcome in. Let's get this started. So, just a disclaimer, this is not financial advice. This content is for informational purposes only. You should only use this for information such as legal, tax, investment, or financial. All content on this site is just in general nature. I do not address the circumstances under any particular individual or entity. Everything that you see today, you'll only consume in the responsibility of evaluating the market. So understand with investing, there is investment risk. So just understand there's always a risk for loss. And so high risk investments, you may use a leverage, will accumulate gains or losses. So we have to be aware with that when we're talking about investing and investing in any market. Okay, so primarily everybody's question is, which is kind of self-describable but not, is what is the stock market? And the stock market is a marketplace where investors can buy and sell shares of publicly traded companies. So when you buy a share, you're essentially purchasing a small ownership of that company. So when you buy shares of Target or Apple or Tesla, you are a share owner. You're a small share owner, but you are a share owner. And that's what pretty much the stock market is. So I'm going to pause it here for a second and let you read, because I want to know what type of investor we're looking at to becoming. So everybody is going to be different. And when it comes to what type of investor you want to be. So if you can take a quick second and read this, we have 3 type of investors. We have long-term holders, we have swing traders, and we also have day traders and scalpers. If you can take a second to look at this asterisk down here, so this one, this one, and this one. Hold on. This might be a little bit too big, so you can't see everything. There we go. So, long-term holders often check your portfolio weekly, monthly, or quarterly. If that sounds like something that is more your speed, then you will be looking into long-term investing. If you like to check your stocks more frequently, often, daily, several times a day, then that's where you primarily will be looking at swing trading, where you're holding a position for a couple days, maybe a week, maybe 2 weeks, right? And then we have day traders and scalpers. And you're holding your position for minutes, seconds, hours, pretty much the whole day. And swinging it will be holding it until the next day. So if I buy a position today and I hold it until tomorrow, that's me technically swing trading. So let's take a look at these more in depth. So long-term holders, including leaps. Leaps are something that you hold for a year or longer, okay? The risk. The risk for long-term holders is generally lower compared to other type of investors since they rely on the overall growth of a company and the market. However, they are still exposed to the market downturns and their capital is tied up for a long time, which can lead to opportunity costs, right? So when I say that, long-term holders, we're talking about prominent companies that we believe in, right? Companies that's been around 25, 20, 10, 15 years, maybe even. So companies like Apple, Meta, Nvidia, Microsoft, Google, more prominent companies like Ford, Chevron, oil companies. So those are more long-term holds, and especially when you find a new company that you've been interested in or looking at, that's another opportunity to figure out a long-term position if that's what you want. Any questions about long-term? Anybody else want to comment what kind of investor they would be by just looking at this? I'll go over the second one right here. Swing traders. So swing traders aim to capture short to medium term gains by holding stocks for several days to several weeks. They analyze price patterns and trends, looking for opportunities to buy low and sell high within that time frame. So kind of similar to long-term holders, but long-term holders are looking at the extent of 1 to 2 to 5 years, right? A company over 4 to 5 years or 1 to 2 years. When you're swing trading, you're thinking about the company at a low, right? I would say United Health Group, right? United Health Group was at its lowest it's been in years. I didn't necessarily want to long-term hold it because all the stuff that controversial that was going on with the United Health Group, but swing trading United Health Group was, less risky, right? Because you're only holding it for a couple weeks, maybe a couple days. You're just buying it at demand and selling it at resistance, right? Then we have day traders. What most people are investing, I would say most people try day trading first, which is kind of backwards. You should long term to swing to day trading because the risk, right? Let's talk about the risk of day trading. Day trading and scalping involve high risk due to the fast-paced nature of the trades and the reliance on the market timing. It requires significant market knowledge, quick decision-making, and the ability to manage emotions. Traders can experience substantial losses if the market moves against them. Okay? Oh, man. This is my bad. That's nice. So, if you look at the risk and you think about what kind of investor do I want to be when it comes to risk, then you have to associate yourself. Okay, how much risk am I willing to take, right? So if I have an account with $1,000 in it, do I really want to risk that $1,000 on day trades, or would I want to sit that $1,000 up and like be half in Meta, half in Tesla, or a quarter in Tesla, a quarter in Apple, or spread it out, right? Would I want to do that instead of risking it all in day trading? And the answer is no. You don't want to risk it all in day trading. You for sure want to build your long-term account with prominent companies and then transition to swing and day trading. So I see nobody commented, so I have no questions, and I only want only one person wants to become a long-term holder or trader. I guess everybody else doesn't want to trade, right? Okay, I'm gonna skip. I'm gonna go to this. How to invest in the stock market. That's everybody's question. How do I put money in the stock market? Like, where do I go? What do I do? Okay, this is your answer. You have a couple of different brokerages you can choose from. I use Charles and Schwab, right? When I first became a trader, Robinhood, Webull, those were prominent companies. Mind you, they're not bad companies to trade with. Your execution might not be as good as if you were trading with Charles and Schwab or Fidelity, right? Because you have no commission fees. Right here, you have 65 cent contract fees. So with those, I want to say they have quicker fills. It's just easier to get filled in your position when you're working with a bigger prominent company. You know, Robinhood and Webull, there's nothing wrong with them. It's just if you're day trading, I would say Charles Schwab and Fidelity, right? Even if you want an IRA, you want to start working on your retirement fund, I wouldn't choose Robinhood and Webull for your retirement fund. So, with that being said, what kind of investor am I? I'm sorry, I just read that question late. I am all three. I do some of all three, which is fun. So let's get back. So about the brokerages, if you are ready to start trading, even if it's long term, you have $100, you have any money that you want to set aside to start trading, and you want to start a brokerage, make sure you write me after this class so I can help you get set up with the brokerage. It's free to sign up with the brokerage. It's only cost 65 cents if you start trading contracts, right? But initially, you won't be trading contracts. Initially, I will have you just buying stocks because we're not getting into options trading right now. We're getting into just learning the fundamentals and just learning how to initiate a trade on your brokerage. So if you want to sign up for a brokerage, make sure you let me know so we can get you started. Okay, what to invest in, right? So obviously, the question is what to invest in to make money, right? And I kind of went over long-term investing and how the risk compared to swing trading and day trading. So we'll start with ETFs, right? What is an ETF? ETFs are investment funds that trade on stock exchanges, similar to individual stocks, but they hold a diversified portfolio of assets, such as stocks, bonds, or commodities, right? So I don't know if you guys ever heard of the S&P 500. That's an ETF, right? The S&P 500 holds about 25% Apple, 25% Microsoft, 10% Google, 10% Amazon. They hold all those companies. Well, the S&P 500 holds the top 500 companies in the world, right? And they combine them into one stock, which is called the S&P 500. So you can invest in that, and it grows roughly around 6% a year. That's a safe place to put your money. ETFs. So you have healthcare ETFs, you have oil ETFs, you have AI ETFs, you have tech ETFs. The tech ETF is called QQQ. You have a million billion ETFs, right? Because they're commodities that hold a bunch of different stocks inside of them. The Magnificent Seven. The Magnificent Seven refers to a group of 7 prominent technology stocks that have gained significant attention investment due to their strong performance and market influence. And as of 2025, I should say, these stocks typically include Apple, Microsoft, Google, Amazon, Nvidia, Meta, and Tesla. That's your Magnificent Seven. So if you hear investors talking about, I trade the Mag 7, they're talking about those prominent companies, the tech companies. These companies are leader in techs. They have shown substantial growth year over year. Yes, signed up for Robinhood. I don't even know where to start. Yeah. So if you already have Robinhood, what we'll do, I'll have you message me when we get done with this, and I'll make sure we lock in on how to transfer your money into Robinhood, and then how to get you started with investing. Right? What do you want to invest in first? What do we see? What do we like? Once we start learning about long terms and companies' financials, we can get into a bigger conversation about your portfolio. But for sure, Apple. Apple's a good one right now. Apple's at its, I think it's the fourth day in a row Apple has been tanking. So Apple's a good one to pick up long term. I'm gonna swing some Apple. I swung some Apple calls until tomorrow, so we'll see how that goes. Bashara, yes, I will make sure I invite you after class to make sure that we get you set up with your Robinhood and get you started with your Robinhood and get you started investing in some stuff. Oil ETFs for sure. I was looking up Halliburton last night. It's a drilling company. It's an oil drilling company. Yeah, we got to get into oil right now. So we'll talk about that oil later today when I hit you up. So next, crypto. I'm sorry, got a notification. Cryptocurrency is very risky, right? But crypto, what it is, it's a digital or virtual currency that uses cryptography and security and operates in a decentralized network based on blockchain technology. I know that was confusing. But to break crypto down and what it is, it's just decentralized, right? So you have major banks who are centralized. They're owned by the federal government. The federal government reserve money is in it. You have to tell the government every time you send $500, like the government needs to know where the money is going and where the money is at. With crypto, used to be before the government got involved in crypto, you can send money, which you still can. You can still send money and receive money from anybody in the world without the government ever knowing who other party is, right? So you have things called wallet addresses, which are huge long numbers and numbers and letters. I'm sorry, guys. Which are huge numbers and letters. That's your wallet address. That's where you send and receive money on crypto. So the government could never find you because your wallet address is so long. How can they say that this is yours and this is theirs, right? So pretty much that's what crypto is. So that's what we kind of got into when you talking about investments. You can invest in ETFs. You can invest in tech, crypto, using the stock market. Okay. Any questions before I move on? Minnetonka. Sorry, guys. Any questions before I move on? Okay. No questions. All right, let's move. All right, risk to reward. Now, I know I'm like kind of moving along, but I don't know if I want to teach you guys about risk to reward or stock market terms right now first, but I'm going to just shoot for the risk to reward, okay? That's what we're going to do. Understanding risk and reward. In options trading, risk is the potential for losing money on a trade, while reward is the potential to make money. The risk to reward ratio is a crucial concept that helps trader evaluate whether a trade is worth taking. A common strategy is to aim for a minimum reward of 25% for a risk of 25%. So what that most people would call that is 1 of 1. We call that 1 of 1 risk to reward, right? If I'm selling at 25% loss and I'm taking a 25% win, that's a 1 in 1. Now, we'll just do this in the trading parameters so you can see how it looks if you're trading the whole account, right? So if your account size is $10,000, say my account size has $10,000 in it, right? My maximum trade I should be putting in is $500. That's 5% of my account. Because if I put 10% of my account and I lose 25% of that, that's me losing 250. That's kind of me losing too much than I wanted to lose on one trade, right? So if you take 25% of 500, that's 125. So that's my maximum loss per trade. If I put 500 into every single trade, that means the most I'm willing to risk to lose is $125. If you're confused, put a question mark because this is important. If I put $500, what app? What you mean, Star Girl, la la? What do you mean by that? Which app? Oh, okay, for trading. Okay. Um okay, let me go back to that screen so we can show you. Wait, where'd it go? There we go. So, I mean, you're asking me what app to download right now, and I would say I just want everybody to get off Robinhood, but it's okay. We're gonna go Robinhood, right? We'll just go Robinhood, right? If you're in here, download Robinhood. I don't have a Robinhood link, but if you're in here, download Robinhood. Sign up for Robinhood. And if you need help signing up, make sure you shoot me a text because I can help you sign up, okay? So everybody, if you're in here, sign up for it. We're already here, right? I'm going to grab this and we're going to go back to class. So does everybody get what I said about maximum loss per trade? Because class is almost over in 5 minutes. I'm sorry. I don't like to throw a lot of information on people because then they get confused. I only like to have 35-minute classes so that we'll be able to just obtain the most knowledge you can, right? Like I want you to retain this and not just, oh, she said this and this and I forgot already what she said. So we were talking about risk to reward. This is going to be the last thing we go over, and then I'm going to show you guys some charts, and then we can get out of here. So if you're confused about risk to reward, type a question in the chat because I want you to understand risk to reward. I want you to understand, hey, let's go to the smaller accounts, managing smaller accounts. Because everybody's not going to have $10,000 to start with, right? Say if you're starting with $1,000, the same principles will apply. Maximum trade is $100. That's the most you can put on one single trade is $100. Because if you put 200 and then you lose 25% of that 200, you lost too much, right? So the maximum loss per trade is $25. The minimum reward is $25. You got to remember this. Just because your minimum reward is $25 or 25% doesn't mean that's your maximum profit, right? Because I can get my 1-1, but the stock can keep going up. And then I'm getting 2-1, 3-1, 4-1, right? And I'm not selling because it's going up. So the possibilities for rewards is high, but you have to understand your loss. You have to cut your losses. You can't hold on to something because you think it's gonna come back, or you have to cut your losses. That's one thing traders get really, really bad. So if you understand risk to reward, I mean, I know you're not gonna understand it. Let me see. Let me comment. What? Okay. Saying I'm not even signed into Twitch, but that's weird. So let me go to my phone and go to Twitch and comment on there because it says I can't comment, which is weird. So I'll fix that maybe. I mean, I'll fix that later. But yes, Star, download Robinhood. I'm gonna try to comment on the video. There it goes. Chat. Oh, I'm not on the Wi-Fi, of course. Okay. I don't want you to be confused. I'm trying to get into to the to the stream, and I can't get into the stream. Okay, there it goes. So Star, reply, download Robinhood. There you go. Perfect. Guess I'll have to do it on the phone. All right. Look, my head's smaller. My head's huge. Nobody said anything. Okay, that's too small. All right. Okay, back to class. Sorry, guys. All right. We're going to talk about one key term, and then we're going to rock out. I'm going to go to the charts, and then we're going to talk about everything we learned today, okay? We're just going to throw it on the chart so you guys can actually see a chart today. I hate stock classes, and nobody shows a chart the whole time. Excuse me. You know, Twitch lets you smoke a little weed on here, so we're chilling. We're vibing. All right. Support and resistance. Who knows what support and resistance is? If you do, comment. If you don't, it's okay too. But some of you may know, some of you may not. All right. Support. Let's go over quick. Support, a price, a level where a stock tends to stop falling and may rebound due to increased buying interest. Resistance, a price level where stock tends to stop rising and may reverse due to increased selling interest, right? So let's go to the charts. Let's open up the charts, man. That's what I've been waiting for. All right, let's turn this off. And then turn this on. Bam. It's easy peasy. Can you guys see my chart? You should be able to see the chart. This one I'm gonna. Whoa, whoa, whoa. I will vibe out with some little music on it because we're done the hard part. All right. Gotta show the music because then they'll copyright you real bad. All right. We're back at it. Okay. So now we were talking about support and resistance. Perfect. Everybody can see it. Cool. We were talking about support and resistance. Trying to find the lighter right here. All right. All right. So let's talk about support and resistance. Let's go check out SPY. SPY, I was telling you guys, it's the S&P 500 that holds the top 500 companies in the world. So we talk about support and resistance, right? So easy lesson today. Let's find a nice support and resistance line. All right, here we go. Perfect. So when you think about clear chart, there we go. Yeah. All right, chart's clear. Now everything is clear. All right. So resistance. This is the stock price. This is the day, right? So let me just break it down so it can be easier. The blue line on this app is aftermarket. The stock market is open from 8:30 to 4:30. Well, let me use Eastern Standard Times. 9:30 Eastern Standard Time to 4 o'clock Eastern Standard Time. I'm sorry because I live on the Central Time, so Yes. So the blue is after night. Yellow is pre-market starts from 4 a.m. to 8 a.m. Yes, you have institutions who can trade at 4 a.m. in the morning, and then during the day. So resistance blue. No, resistance just means night. That's the nighttime. It's 5:30. So let me give you guys the answer. Green would be support, right? No, so green. So I know I didn't teach you guys about what the heck you guys are looking at, which is fine though because I like to throw you guys in the water, and then expect you guys questions. That's when you guys ask questions. So each of these you've probably heard is called a candlestick. This is a candlestick. This is a candlestick. Red candlestick obviously selling. The candlesticks means obviously buying. But when we're talking about support and resistance, right? If you look at my if you look at what I commented in the chat, right? And then using the definition, right? The definition says support is where buyers usually step in and stop price from falling, right? Bam. Let's go to the chart. Support is usually where buyers step in to selling. Where do they step in? Buyers step in right around 680. See how price never went below this level, right? Like, don't mind that right there. See how price never went below this level because this is support. Step in and show this is support. I'm talking about resistance. Buyers are here. Buyers stepped in. That makes sense. Buyers stepped in here and the price never went below 680. So if I bought in at 680, guess what? I rolled it all the way up here to 693. That's a $13 move in 3 days. 3 days, $13 move because I bought support. I seen it. Resistance. I did say there was two level resistance. Let's go over resistance. Resistance is where sellers usually step in and stop a price from rising. So this will we see that sellers, red candles, we'll see a lot of red candles step in because sellers are coming in the market trying to sell at these highs, right? Because if I was someone who bought that level, because this we're just gonna use these two levels. Technically, this is resistance too. So not resistance zone two, right? And I usually mark those resistance zones red because that's where sellers step in. And I want to know, hey, my sellers, because hey, if I up 80 to 16, you're gonna sell profits. When is it gonna be okay to take profits? Because that's what we're in here for. We're in it to make money, so we have to learn when to take profits, right? So that's what resistance is. Sellers stepping in the market to sell. Now, if you're a trader, you have these levels, right? Because guess what? You can take trades off of these levels. So resistance right here because you see sellers stepped in, but right over here you see support because sometimes resistance turns into support. I know that's next level right now, but we're just looking so you guys can get an understanding of what you're looking at when you're looking at a chart. So right here, Tuesday, January 6th, this is right. The trade was, hey, if it can break above 690, we'll see a move into 693. The next broke down a little bit. It held as a support. It held 691 as support. And 693 rose right into 693 supply perfectly, right? You did on the 2-minute chart trade. You were in the trade, but 20 20 minutes. What you're looking for? You're looking at support. You see, it never went below this level. So hey, market opens. Hey, and let's see where it goes, right? But you got to remember you have to stop. So if my long position starts here, my risk, when you're in the trade, now all you have to do is worry about never going under You don't want to see it do that. You seen it do this, and bam, you held it all through that, made you some bank. That's a quick lesson. I know you're confused with what she's saying. Listen, it's all gonna make sense as you come to classes, as we work together um, to turn you into a trader you want to be. Gotta get rid of these drawings now. I fix my spy chart too now. But yeah, I mean that's pretty much resistance. Right? You gotta support right here, like I said. As we get into the class, as we get into the new year, as we get into everything, you will learn how to trade. And I will teach you everything I know about trading. Let me get my drawings back on here. There we go. All right. So this is what my trade looks like. These levels, these support levels, support levels, support levels, resistance, resistance, resistance. Let me show you meta. Same thing, you know. The chart looks pretty much the same. On the chart, you have levels, trades you take, you have notes you take. I was talking about the fail reclaim of 690, 6 the resistance right here. Look at that. What? 2% move. So 2% move on options or on equity, it's a lot. You have a lot invested. But yeah, learned about support and resistance. I hope the class wasn't too long. We learned about brokerages. We learned about the S&P 500. We learned about risk to reward. I will be having another class next Thursday. But in between that time, we do have some homework I want you guys to do. I want you guys to sign up for a brokerage. If you're in here and you don't have a brokerage, that's your homework, to sign up for a brokerage. If you're in here and you do have a brokerage, the next step for next week homework is going to be, let me pause this because it's commercial. Okay, let me turn that off. All right. Of course, he doesn't want to pause. There we go. What I was saying, if you do have a brokerage, the homework for you is to get money inserted into your brokerage. Let's start you an IRA. Let's start you a long-term account, a swing account, day trading account. Let's get you started so you can start making money. Okay? And once everybody is started in the class, in their brokerage, and has money in their brokerage, we can start trading together. Everybody can start trading together. And that would be fun. So, yeah, guys, thanks for coming out to the class. If I told you to DM and inbox me so we can get you started. And then, like I said, for next week's class, we'll be going over terminology. So when I said, hey, candlesticks, support and resistance, dojis, everything like that, we'll be going over the terminology. And then the next week, we'll be going over actually entering a trade and how you enter and exit a trade. So, yes, guys, make sure you guys shoot me a text message. If you have any questions, definitely comment them. I'm going to rock out to some music for a while. While everybody's asked questions, and then, yeah, we're good to go, guys. Thanks for showing up. I'm ready to start swing trading. That's what I like to hear, okay? You ready to start swing trading? Let's get some money in your brokerage. Let's get started. I have really a lot of swings I'm looking at this year, especially oil, like you said. We can buy some oil leaps about 4 months out until all this stuff gets situated with Venezuela. Yeah, we'll be looking good in 4 months. But yeah, if you have any questions, yeah, just ask away. Thank you, Shar, for showing up. I appreciate it. I love when y'all come out and are serious about what you said you want to do. Thank you for coming. I'm gonna stay on for about 3 more minutes. Answer any questions. Answer any of all questions. I'll drop this music a little bit and just go ahead and ask away.
Every day some new shit. Beefing with my bitch right now, but life still lit. Ride down the strip, $500,000 whip. 5 M's for the kid for ice like this. Everything I want to hit, I scratched them off the list. Ask about me, word around the town, I'm a pimp. Ho won't get my heart, I'm putting it down, I'm not a simp. Big OG, I'm him. Park the back the lamb and then go GD, I'm trip. Catch a nigga and blam, drench gang, we ain't nothing like them. Only nigga you know that rap come through the rack, no tint. Hustler got them racks back, man, my pockets were stacked with lit. All blue hunters look like flapjacks, NASA duffel in my knapsack. I don't back, don't check my track record, niggas shot at us, we clap back. At 18, I was a 7-figure nigga after tax. I spent the ticket on both the bitches I wiped, and that was facts. On Twitter, don't believe the hype, I put my life on wax. I made it back in, blew that shit the same night as sex. I wake up and go get that cake, I ain't the type relax. Me dank rails with a lick 3 ways to get a brick of crack. The Glock hit, what's the name, like a freight train, his brains was on the track.
Any other questions? Well, thanks for coming out, guys. Peace out.